Shares of fintech giant SoFi were up a couple of days ago after analyst positive rating. Now Needham initiated coverage with a buy rating and a $10 price target, which is right under this resistance band, which we'll get to in a minute. Analyst sees SoFi stock benefiting from vertical integration. All right, so bigger picture, price has been range bound for quite some time between, say, $10 support resistance band and this $6.50 support band. Remember, the best levels to get long is the monthly bias level at $4.50, which some back holders were able to get in the stock on this steep pullback back in May of last year. Going to the weekly chart, you can see just price has been, if you take this current range bound price action, you got to go back to June of last year, right? So price has not really done anything for a whole year. Great for iron condor traders, right? Sell credit spreads here, sell credit spreads here. Now before we continue with the analysis, let's look at this article. So shares of SoFi have witnessed some rough waves this year. Still, SoFi stock is receiving a mid-year pop today. This was midweek, courtesy of an optimistic analyst review. With the underlying company expanding its product and services, SoFi could rise above the MOOC. Now here's what the analyst at Needham said. His name is Kyle Peterson. He says the following: we view SoFi as a long-term winner in the digital lending neobank space, largely due to its focus on prime and super prime consumers and possession of a full banking license, which we believe provides the company superior unit economies compared to other consumer financial platforms that focus on lower income borrowers and or lack a banking license. Now he goes on to say, he talks about the firm's technology product Galileo. In particular, SoFi's Galileo platform provides services to other fintech companies while letting SoFi benefit from greater vertical integration. SoFi has also entered the AI space through loan underwriting and card issuance. Kyle goes on to say, we view these businesses as the crown jewels within SoFi, given their higher growth nature, lack of capital intensity, and opportunities they provide to scale efficiencies into new products or geographies. Lastly, he's bullish, and he thinks that the stock still lacks conviction among other Wall Street analysts. So part of his hesitation centers on the lack of forward progress. Again, for the past 5 years, shares are still down 27% in a bull market, essentially. Yes, we've seen pullbacks, but for the past decade and a half, we've been in a bull market. All right, so where's price going from here? Current leg is down. However, the last several weeks, price has been basing. And part of that reason is if you go down to the daily chart, price has been hovering just above this buy zone. And you can see price nearly nipped the upper portion of that band at about $6.82 before pulling back. I think price goes higher. You have to contend with these moving averages, which is now serving as dynamic resistance. You can see that the 200-day moving average was trending up and now it's plateauing. You could also see that we did have a depth cross. That's where the 50-day, which is in red, crosses over and down underneath the 200-day, which is in yellow. So that's bearish sentiment, but in a sideways market, you want to play the extremes. That's where the buyers and the sellers, you're going to have an imbalance. In this case down here, the buyers severely outweigh the sellers, and then up here, the sellers severely outweigh the buyers, which is why you see this movement, right? This moving up, movement down. So no trade set up at the moment. One can dollar cost average in if you believe in the stock longer term. But yeah, I agree with the analyst target of $10, which would be right below this resistance band. Thanks for watching. Subscribe. Please like the video.